Hi everyone, good morning. You're watching Market Fatafat right here on ET Now. This is the show where we get you a crisp and comprehensive wrap of all the big movers and shakers today in trade. I'm Mubina Kapasi, and a quick glance at the markets will tell you that we are attempting to rebound after the massive carnage that we have witnessed over the last three trading sessions. So the Nifty has managed to reclaim 11,300, though mind you, it's still on a bit of a jittery note. Today we have with us on the show to flag off the technicals, Gaurav Bissa of LKP Securities, and even Kunal Bothra and Soumya Sharma as well will be joining in. So good morning to all of you. Thanks for joining in, and let's kickstart the show then with Tata Motors. First quarter numbers are expected today, and ahead of the numbers, look at the way the stock is tanking. It's 1.5% lower, and it is in fact one of the biggest losers on the Nifty today in trade, below 150 rupees. As usual, the expectation is that the JLR number will disappoint. That is going to be a key drag, but not to mention even Tata Motors' own domestic sales have not been that great if the monthly numbers are anything to go by. Ahead of the numbers, like I said, it's 1.5% gone. Kunal, you're talking about SBI today, and today it looks like the PSU banks are on a bit of a backseat.
So yes, Mubina, sixth straight day of the stock, dropping a bit lower. I think from 375 levels to now, the stock where it's at sub 340 levels. I think it just about indicates that the stock is going through a bit of a pain, and this pain could last for some bit of more trading sessions. Now, the longer term average for SBI is closer to 310 levels, and the 50 EMA is closer to 350. So I believe that net the stock is trying to establish a range in between these two key averages, and somewhere closer to 330, 332 is where I believe the next support arise for SBI.
Okay, that's SBI for you, and yes, Kunal is flagging off the chart patterns for this one. Okay, Soumya, Intellect Design, meantime, is a big loser as well today in trade. In fact, it's among the top losers in the Nifty 500.
Well, that's right. In fact, we had the company coming out with their results, and as far as the results are concerned, well, we believe that for the Q1 FY20, the results weren't that really great, given the fact we're seeing some amount of pressure coming in the stock. The revenues, although were up by 14.7% on a sequential basis, the PAT, however, was down by 93%. So there's a massive decline coming in as far as the profit line is concerned, and that's the reason the stock's actually losing close to about 6% today.
Okay, let's talk about another stock, or should I say index actually, and that's the Nifty Bank. After almost 6 days of continuous selling pressure, finally a bit of green seen on the screen for this index. Gaurav Bissa as well joins us now. Gaurav, hi, morning. Anything that you're observing here?
Good morning. There's a very interesting chart pattern that have formed on Nifty Bank Index on daily charts. We call it as a bullish bed harmonic pattern. If you look at the Ichimoku studies as well, then the time as well as the price theory also aligns with the view that as long as it's trading above levels of 28,900, 950 on the spot side, it can test levels of 29,500, 29,600 in next two trading sessions. So for me, it's a buy on dips index, Nifty as well as Bank Nifty.
Okay, that's Gaurav's strategy on Nifty Bank. Now let's flag off one more banking name. Like I said, PSU banks are underperforming a tad bit this time around, and Canara Bank came out with its first quarter numbers. It reported a profit in this quarter versus a loss in the previous quarter. However, the operating performance was muted. Gross asset quality as well was more or less stable. NII was down, however, by 17% on a year-on-year basis at 3,241 crore rupees, and the profits prior to the provisioning as well had declined. It's just that the total provision figure had dropped from 5,500 crores to just about 1,900 crores in the previous quarter. So that was one saving grace, for the profits in general, and that's the reason why perhaps you saw the bank managing to eke out a profit in the bottom line. So you are seeing the stock dwindle, and how, in fact, as we speak, it's at the day's low. Kunal, ABB India, what are you observing in the way the stock's moving?
So the stock is holding on to its 200 moving average. I think after 2 weeks of straight correction from 1650, 1670, the stock has come back to sub 1400 levels. It's now hovering very close to its 200 moving average. Now the reason for me flagging the stock is because on the longer term charts, the stock has come back to a strong support neckline, which is at this 1400 level. So I think if on the monthly charts, on the quarterly charts, if this level holds on for the stock, which is also the 200 moving average, then I would expect that the stock could come back into a full strong uptrend mode. And I think from current levels, the risk reward would also be more favorable for bringing fresh longs on ABB. So I think that's a stock which a short to medium term investor should keep on his radar. I think the stock holds on to this 200 moving average. The risk reward and the chances of the stock coming back to 1700 plus levels are pretty much high.
Okay, so that is the strategy Kunal is recommending on ABB. More result reactions then, and the first quarter numbers of Bharti Infratel certainly seem to be pleasing the streak. It's a nice It's a nice almost 4% uptick today in trade. Soumya?
Yeah, that's right. In fact, the revenues were up by about 3% and were slightly above what we were expecting. And as far as the profits are concerned, we had profits of over 887 crore rupees for Infratel versus 608. So there was almost a 46% jump in profits, as well as the net additions in the co-location were additions after a consecutive decline of 6 quarters. In fact, there was also increase in rental income which aided the revenues. Along with it, the rise in profits and EBITDA that was seen was due to one-off adjustments and change in the accounting standards. So if we adjust for these this one-off, the EBITDA margins were pretty much stable at 42.9% versus 42.61%. But however, given said that, there was the number were pretty much ahead of the street expectations, and that's the reason why we've seen this stock gaining close to about 3.6%.
Okay, Infratel is a big mover today in trade, but mind you, we have seen some weakness in the stock recently as well. Okay, Gaurav, Hero MotoCorp, today we have been seeing a nice bounce come by in this counter. Even last week, when there were a few days where the auto stock was being battered out of shape, Hero Moto managed to stay resilient. Your view here?
Well, if you look at the last few days, the stock has seen a small bounce back, and also we have seen early signs of double bottom formation on levels of 2350 levels. Some amount of positive divergence also seen on daily charts. My expectation is that 2600 is what one can expect in this name in next few trading session. 2350 and below.
Okay, so that's a buy call from Gaurav on Hero MotoCorp. A quick look then at ET Now small case index. What is it indicating now that the markets as well have attempted to bounce back a little? Well, it is a minor bit of green seen on the screen for ET Now small case index, or should I call it the Rise with India small case index. And we have once again managed to surpass the 500 mark. We seem to be staying above that level. A reminder for all our viewers, the Rise with India small case index constitutes stocks that are representative of sectors that adequately show how the Indian economy is doing. So there's a representation from financial services, consumer discretionary, among various other sectors. So that's a very important parameter that we at ET Now will keep getting you getting you up to speed for. Okay, let's look at Shriram Transport Finance. Delivered its first quarter numbers largely in line with expectations. And to talk about these numbers, we have with us Mr. Umesh Revankar of Shriram Transport. Mr. Revankar, thank you for joining in on ET Now. Let's start off first by understanding, of course, that even though it's been a tough quarter, you have been able to perform better. Profits have grown almost 11%. And I think what stood out is the limited stress on your books. It was only up by 3.5% sequentially, the gross NPAs. So what aided you, to put up such a performance?
Basically, the demand for a used vehicle has been reasonably good. Even though the election had some impact on the cash movement, and therefore disbursement were a little slow during the election time, but June was quite good, and we were able to reach our expected target levels. And the asset quality we could manage, because even though the election had some impact on the cash movement, we increased our visits to the customer more frequent, and we were able to really manage the situation. And I believe going forward, as the monsoon picks up and the festive period comes, things should become much better.
Okay, let's delve a bit more on the asset quality front, and especially if we have to talk about the two key segments, due CV and new CV segment. How has asset quality or NPA trends, shaped up there, and what's the, which states are showing higher signs of stress?
The trends have been almost on the same level. I don't really differentiate here. But used vehicle is typically more the rural demand, and certain rural pockets there were challenges where there was a drought hit in the last year because of lack of monsoon, especially in the central and east Maharashtra and Chhattisgarh, etc. But I expect this year, if the monsoon coverage is good in this belt, we should be able to recover the whatever has become NPA. But overall, what is important is the credit cost. The credit cost we are able to maintain at around 2%, and that 2% would continue to be a trend for the full year.
Of course, all eyes are on the CV cycle. I mean, are you seeing signs of a slowdown in the overall CV cycle, and what factors are you observing there?
See, if you look at the slowdown from the last October, the one was the excess capacity that got created because of the additional weight, axle weight norms, which allowed the vehicles to carry 15% more weight, that created additional capacity. And added to that, the construction activity, especially in the real estate, came down significantly. Then mining activity also has slowed down in certain pockets. I feel that once there is a pickup in mining and construction, and I feel there will be normalcy in the vehicle demand. Vehicle demand should pick up in the second half of the year, and also BS4 to BS6 movement also should help customer in deciding on pre-buying. So I feel the second half of the year we should see a good demand on the vehicle front.
Okay. What about margins? I mean, that has declined. So if you could share with us an outlook on how margins could shape up, especially since we are looking at this entire tight liquidity scenario in the NBFC space.
We have been carrying excess cash on our balance sheet for last 2 quarters, and that will continue to be there till we feel very comfortable about overall liquidity scenario. We are able to raise resources very comfortably, but still we felt that some more cash to be on the balance sheet, and in these circumstances, that led to a NIM getting reduced by around 20 basis points. And I feel this would continue for the full of this financial year, because liquidity is still not as smooth as it was maybe in the previous year.
Okay. The disbursements have actually seen a bit of a muted growth versus the last quarter. What's the reason for that?
Now, if you compare to Q on Q, the disbursement have been almost flat. So normally Q4 is large and Q1 is least. But since we are able to maintain the same disbursement growth, same disbursement as the Q4, I think it is a reasonably good performance in spite of having the election in between. And we should be able to grow in the second quarter on our disbursement further.
Yeah, well, elections certainly have been a niggling factor for a lot of sectors. Now, given the overall economic and auto slowdown, is there a case for moderating the AUM guidance for FY20?
I still feel there will be a larger demand in the second half of the year. So we estimate the AUM growth to be around 15% for the full financial year. And because the second half of the year, we should be able to really grow substantially because new vehicle demand. And that will also lead to used vehicle transactions. So that is the estimation what we have at this stage.
All right. And finally, I must ask you, is there a possibility of any sort of a three-way merger within the group? Any updates on that front?
See, we have been discussing this for more than a year, and I cannot say the deadline or timeline for that, but discussion is still on. So it could we could come out with some time, maybe in a couple of months. Right now, I will not be able to comment on that.
Okay, Mr. Revankar, thank you then for joining in and sharing with us what transpired for Shriram Transport in the first quarter and what can we expect. Stock, of course, passing in trade. Quick break right here. Come back for more movers and shakers on Market Fatafat. Welcome back. You're watching Market Fatafat on ET. Now let's quickly continue with the countdown. Kunal, Sun, Pharma, that entire stable once again looking pretty active in trade. Spark as well as buzzing. Your view?
So yeah, Spark, Sun Pharma both are doing pretty well. Now the chart patterns on Sun Pharma is now getting a shape of a bullish flag and a pennant combination kind of a pattern. It's nearing a consolidation, and I think the consolidation could end pretty soon for the stock price. Look at the last 2 weeks or 3 weeks of this price recovery from 370 levels to 430, then sideways consolidation. So I believe that the stock should be inching towards a breakout pretty soon. I think at this point of time, a buy on dips closer to 420, 415 could be a very good strategy for Sun Pharma, anticipating the breakout, which should take the stock to almost 475, 480 levels.
Okay, moving on very quickly. Gaurav, OMCs continue to, I think, ignore the bounce in the markets. IOC continues to go lower in trade. Your view?
IOC has been finding some amount of bounce backs at levels of 145, which is also the 200 DMA for that matter. A sustained move below 145 can lead to a fall till levels of 138. I would recommend shorting below 144, 145, keep a stop loss of 147 on a downside. 138 is what I would be looking at. Among the OMCs, 3 OMCs that we have on in FNO, I think IOC is the weakest one.
All right. A bit of a bounce attempted by the stock, by the way, on an intraday basis. And yes, as Gaurav has flagged off, it's trading near its 200 DMA. Brokerage reactions on Jubilant Foodworks. Soumya, what does it look like?
Well, after the weak set of numbers that the company posted yesterday, we have majorly all the brokerages cutting their price targets. As far as Jubilant Food is concerned, CLSA has cut the target price from 1,500 to 1,400 rupees per share. Not just that, in fact, all these brokerages have also cut the EPS estimates by over 10%. Well, the street is certainly not happy with the set of numbers the company posted for Q1 FY20. But however, having said that, the stock right now is trading in green and gaining close to about 0.6%.
Well, yeah, what a sharp recovery in the stock price today on an intraday basis. And Kunal, we were talking about Hero Moto. You're flagging off another two-wheeler, Bajaj Auto.
So yeah, interesting chart patterns have been a year as well. The stock has formed some sort of a triple bottom support at this 2500 zone. Now look at the last 10 months or 11 months of chart patterns. The 2500, 2450 I think zone has been acting as very strong support zone. There is a strong demand which emerges at those levels, and it lifts off the stock prices quite significantly. We've seen that happening twice for the stock price in this last 10-11 months, and this time around as well, I believe there could be a strong case of the stock bouncing off from those levels. So looking at the prospects for Bajaj Auto, I think it could be a good contra buy at current levels.
Well, yeah, a bit of a bounce attempted by Bajaj Auto, 1.2% higher. Gaurav, on the other hand, we have NIT Tech, which continues to go lower in trade especially after the first quarter numbers. You as well have a sell here.
Well, yes, it's a conditional sell. It had a small breakdown at levels of 1320 or so. We have seen almost small targets happening around 1290, 1285. It has nice set of support at levels of 1270. I would recommend selling below 1270. Stop loss for this put to 1290 and the target of 1240 in mind.
Okay, so it's a sell by Gaurav on NIT Tech. Soumya, ICICI Prudential came out with its numbers. Was it as good as its peers? That's HDFC and SBI Life?
Well, honestly, Mubina, if talking about ICICI Pru on a relative basis, the company's performance was not that great as it was for HDFC Life and SBI Life, but on an absolute basis, the company's posted good set of numbers. Well, the VNB margins, the key metrics of The VNB margins improved from 17.5 to 21%. The VNB saw a good growth of 26.6%. But at the same time, it's not just that. Even in fact, all the brokerages have given a thumbs up as far as the results are concerned, and they're maintaining their overweight and outperformance stance on ICICI Pru. As a result, the stock is also seeing a sharper uptick of 5.72%.
Well, yeah, all these life insurance companies certainly seem to be pleasing the street a lot of late. And Kunal, we were talking about IOC, HPCL as well, showing a similar trend?
Yes, Movina, and the stock I think is down for the third straight session, from 295 to 96 levels to now, sub 270. We flagged off the stock even yesterday, indicating that the stock could continue to show weakness, and 270 was the level which we highlighted yesterday. I think after today's weakness as well, you might see the stock dragging another 7 to 8 points lower from current levels. So 264 is where I would place the targets for HPCL, would revise the targets on the downside.
Okay, that is Kunal's recommendation on HPCL. He is revising his targets even lower. Okay, Gaurav, Lupin, meantime, some of these pharma stocks have been attempting a bit of a bounce, Lupin included. With this 4% up move, what would you recommend? Anything to anything spectacular that's catching your eye here?
Actually, no, it's stuck in a range of 720, 725 on the lower end. It has been finding support. We have seen 2 or 3 bounce back coming in. Over 775 has been actually a strong dead trend. We saw a breakdown happening below those levels. As long as it does not cross and close above those levels, I would not be buying. On the other hand, selling is advisable only between 725. So either of the data points that I mentioned, if they are not reached, I would not be initiating a trade.
Okay, so not much of a trading opportunity being observed by Gaurav in a Lupin, stuck in a range. With that, we are out of time, unfortunately. So Gaurav, thanks so much for joining in, sharing your technical strategies, and Swami and Kunal, thanks to you as well. Coming up next to take the market action forward is Markets at Noon.